Hello everyone, welcome back to another trade recap. Today is the 20th of March, Thursday. And today I want to take you over some of the trades that I've taken. I've taken 3 trades and we're going to dive right into what happened, why I took them. And honestly, even though I'm green on the day, these trades I am not the most fond of and I would have rather not taken them entirely. But I wanted to push it a little bit today, kind of see what's going on. So you'll notice some of these trades, all of these trades actually, all 3 of them have stop losses. That's what SL means. So I drag my stop losses super tight, and for good reason, because you see some of these trades I would have gotten stopped out otherwise. So if you haven't already, follow me on Twitter and subscribe to this channel. I have a lot more trade recaps and video content coming up. And let's get right into the analysis for today. So starting off the analysis, I always start off with not the chart, but the news. Starting off with the news, today is Thursday, March 20th. And we have had unemployment claims on 8:30. Then what I'm more concerned about is what happens after market open, because I only trade after market open, which is 9:30. We have some news here, but the one I was really looking at was this one. Trump speaking at 10:40 a.m. and we have no idea what this guy says and how it moves the market, and that's why you got to be very cautious when Trump or Powell wants to speak. So today was very interesting, and I'll show you why some price action was very interesting, and played it really cautious. So after I look at the news for today, I want to go ahead and take a look at the chart. And following the OCS trading methodology, very complicated way of saying, just take a look at OCS, order flow, context, and then setups. So starting at O, we're taking a look at order flow, which is another very complicated way of saying, just take a look at the trend of the market. Okay, we've been on a downtrend. This is the daily chart. We've been on a downtrend for a while now. We've been going down the past couple days, and then we have a lot of inside days, and this signifies a turning point, right? Sell, sell, sell. Buyers are stepping in at this area and we're trying to push it up, but sellers are also very present. So let's take a look with that order flow in mind. We understand we're at not a downtrend. We're at a potential reversal, and what potential reversal zones are, it's a chop zone. Okay, so you have downtrend, you have uptrend. You could even say accumulation. I like to call it a potential reverse zone because that's more clearly descriptive of what we're trying to see here, or what we're seeing here. You could say accumulation, but that doesn't kind of justify where price might be going or what it's trying to do. Okay, so technically you are accumulating, but this is also a potential reverse zone right here as we're trying to fight our way up and buyers are trying to buy it up here, and that causes a lot of chopping. As you can see, inside day, we're barely breaking out, no clear movement yet, because every time we break out we're coming back down, try to break out, wicking us out, and today seems like another inside day, right? After the daily, we want to go into the 4-hour. Let's look at the 4-hour. So what are we looking at in the 4-hour? I would even say at the daily, and I actually kind of skipped it over on the daily chart. We're looking at the C part of OCS, which is context. So we got to understand context. One is what is order flow doing? One is seeing the order flow. So context is what is order flow trying to do? And then really it comes down to the fair value gaps. That provides a lot of context, okay? On the daily chart, you see this fair value gap, the bearish gap right here, created on 10th of March. The reason I didn't highlight this is because we really wicked in here multiple times. It kind of broke out here, then broke below it. So that's not really relevant anymore. But if it was relevant, then I would have marked it out here as well. So 4-hour, what are we looking for? We're looking for more fair value gaps to provide us a story. And fair value gaps that are relevant. So I don't want to necessarily use fair value gaps that have been used, like this one, for example, this 4-hour here. We broke above it, right? At this point, I wouldn't necessarily use it because the moment you break out of it, now what is it? It's a 4-hour inversion, right? which is still relevant because price likes to test inversion fair value gaps. And in the 4 hour, you could see it break up and coming back down into it. So that's still fairly relevant. I should actually put a 4 hour inversion here, which I haven't created. That makes a lot of sense. Usually inversions, I just do a blue and then so 4 hour inversion. So this became an inversion. We're going to see if it holds, right? So that's one. Another fair value gap we see is in the pre-market session right here before New York Open. And this is caused by the news that we spoke about earlier. Employment claims came all the way down here. Do you see any other 4 hour gaps that could be relevant? Maybe this one, but we broke out of it, kind of coming to retest. The reason I didn't mark this one is because we had a more relevant fair value gap present right here on the sell-off. That's why I avoided the other one. Okay, so now we understand fair value gaps. They are creating context. And how do you understand context? Context is literally where is price reacting to and where might price go to? Where are draws on liquidity? We're trying to understand what price is trying to tell us. We know reversal fair value gaps inversions are a great draw on liquidity because price will like to test it time and time again. So once it inverts, once it breaks out, it will come back down to test it again. And we've seen this happen here. So that's context. It allows us to understand price could be reversing down if you were to look at it at this time frame right here, right? But while it was opening up, we saw another one. What does this context represent? This 4 hour bearish gap right here. Well, before market opened, we didn't test it yet. So again, untested gaps are also a good draw on liquidity because it's untested. This plays a selling point. So that context is if price comes up here, I am honestly looking to see if it sells off, to be honest, because we have not tested this 4 hour bearish gap that we made in the pre-market. Most likely price can come up here and reject. We've seen that happen many times. So that's the 4 hour context. Coming down to the 1 hour, we're going to basically do the exact same thing. Looking at pre-market here. So these zones right here, you see bearish gap, right? I did not mark this one because we had another gap present. I didn't see it to be as relevant at this point because we already broke through it on the pre-market. But you know what this is? This is a bullish gap, right? And guess what price did? It came back down to retest it. So that provided us context, but we don't trade in the pre-market session, so I wasn't really too concerned with that one. So again, now what we're seeing is we're seeing nesting happening, right? Here's a 4 hour gap, bearish gap, and a 1 hour bearish fair value gap together. And that gives a stronger story and stronger context, meaning stronger sell pressure is possible here, right? 1 hour gap, 4 hour gap, that means something here. So going down after the 1 hour, I just go down to the 15 minute. 15 minute, you see a lot of gaps here, but that's at this point a little too redundant for me. I didn't take draw out all of these. That would be too crazy because the 1 hour and the 4 hour tell us the story that we need to see. And then going down to our lower time frame, we want to then take entries off of lower time frame. So before we get there, out of our OCS methodology, S stands for setups. And this is also where we create our trade plan, right? We want to create a trade plan seeing what's the context, what's the order flow, what's the trend of the market that will align our expectations. Are we looking at very big moves? Are we looking at moves to the upside? Are we looking at moves to the downside? That's what order flow tells us. Inside days, I don't technically see a lot of directional moves, so I'm expecting non-directional movement, maybe even choppiness, to be honest. Which, to be honest, we didn't even get much choppiness over here. We just ran right in the beginning, as you see, which is also possible. But the expectation aspect of your trade is very important because otherwise, in choppy days, if you see the order flow being choppy and your expectation is, I'm going to try to aim for a 10x, and all you'll get is up, down, and that's how you blow your account. Taking trade after trade, trying to aim for the moon, right? So expectation comes through order flow. Context tells us what we can start planning for. So again, I'm seeing a lot of bearish gaps right here. And we see that our 1 hour bullish gap, if you go back up to the 1 hour, we have a 1 hour gap right here, which did not break. So it has not been negated yet. If you see an instant break and the next candle goes all the way up, it has not been negated and it's still fairly valuable. And we see that as well, right? You see how price came back down pre-market today, and then we just bounced. So 1 hour bullish gap is what I'm looking at, because I see in the pre-market we bounced off of here. So once that has happened, I want to think about what we could trade. What we could trade up, what we could trade down. We should usually have two theses on two trade plans. What would be the bullish case scenario? What would be the bearish case scenario? And in between that, you could also say, maybe we can plan for, like, expectation wise, what if it's a chop, right? But we don't really take a trade plan based on choppiness, right? We want to take a trade plan, meaning if it comes down to here, I'm looking at a certain reaction to happen. I'm looking at longs or I'm looking at shorts. That's the trade plan. That's where S comes in to look for setups. So planning the setup, I was looking at the 1 hour. So the reason I'm looking at the 1 hour is because I saw it bounce and I wanted to see another bounce, which could indicate going up, right? And as per my trade setup confluences, I guess you could say double tops or double bottom, but really they're lower highs and higher lows, which is one confirmation I look at. And that was present here as well, right? When you see price at a point of interest, which is the 1 hour gap, and it starts going low, and the next time it can't go as low, that tells us a story. That means they're confirming the character of this bullish gap, right? It couldn't push lower. Now, unfortunately, I could not take this trade because the other aspects of my trade is getting into a lower time frame fair value gap, whether it be an inversion or a continuation fair value gap, and then get in a trade once I see, a lower high or a higher low. Again, it's at the very beginning of the trading day, not the best case scenario, because the beginning of the trading day is very wicky action, right? So it came down, we saw a higher low, and then it just went. We had a very tiny 1 minute inversion, which I guess you could have played it, but how do you trust it, right? How do you look at this entire drop and then you see and it happened really fast. So if you were looking at the market live as well, you'd see this is not slow. This is super fast. Within like 2 minutes, it just brought it all the way back up. And so I didn't get in on this trade. Why did I not get in on this one? Because it seems like we had a 5 minute bullish gap. This is a nice continuation setup. But as you can see here, there's a lot of equal highs here. It took liquidity. This could have been the Judas swing, right? It takes liquidity just to go all the way back down. So at that point, I couldn't trust this either, because I don't know if this is the liquidity grab that is happening here, a liquidity sweep, right? But turns out it wasn't, and buyers were really present in the morning here, and it just kept going and going and going. I got busy with phone calls, this area right here. And for those of you who don't know, I have a day job as well. So I work and I trade simultaneously. Kind of distracting, but it is what it is. So I was distracted here, and there's no way I'm placing positions when I'm not, right, taking a look at it. And these moves happen super fast. So now that we're done with the analysis, let's actually get into the trade recap part. So we're going to go into hindsight trade recap, and then I'll show you the live trade recap. When I saw this extended part here, again, I really didn't like getting in long when we've been this extended. But we did have a continuation setup right here, and it really started pushing. And on this candle, I got in. And as it went, I just grabbed it over here. I pushed my stop loss up because I didn't want it to push back down, because I didn't trust this area super much, and I knew I had to be very quick with my trade. And I can't wait to like have a 10x trade, go all the way to my liquidity point, like up into oblivion or something like that, right? Prior day high was my drawn liquidity that I was looking at, but we never got that. But I got a quick trade. It wasn't too bad, 1.51. I would have liked to have entered. So my recap, I should have entered here. I should have set a proper risk management stop loss limit order. But looking at price action and how violent everything was, I wanted to wait and see what price did at this area, but it was just way too fast, right? The moment you saw good rejection and it starts going up, it's already going. So that's another point I have to kind of manage. How do I get in properly, but at the same time confirm the fair value gaps and that it's showing good signs. I guess you could say the fact that it was wicking down here, but you don't know because we're already so extended. We're at the top of a 1 hour bearish gap. This could have literally been a down move right here, a violent move. And we've seen that a lot where you keep running, and then one candle just comes straight down. So that's what I was thinking when I was in this trade. So I had to be very careful with it. But it seems like buyers were in, took the risk here, 1.51, and I was happy with that. As you can see here, I was trying to see if there was a lower low as price continued. Even though we weren't really in any sort of point of interest, we were above it. But, you know, we just broke out of the 1 hour. Price could try to come back down. Maybe it doesn't close above, right? If we look at the 1 hour chart right here, where did it go? Which is actually exactly what happened, right? So on the 1 hour, we couldn't break above it. We wicked, we came all the way down, couldn't break above it, sold off. So this 1 hour bearish gap really played its part. In the 1 minute, so when you're looking at it in the 1 minute chart, all of this can still be a play into the 1 hour. Anyway, so with all of this wick action going on, I'm just really being patient, really looking at it. And today I gained a bit of confidence. Normally I'll just take the one trade, but in the past two days here, taking a move and made some $200-300. I'm still following my 10% risk management rule. Decided to take, let's see, another 2 trades. So as price kept moving, you know, today was a busy day at work. I'm still getting phone calls. As you can see here, I did see this lower high. I didn't have a really good fair value gap to really get into, maybe this one, but again, wasn't paying attention here. So as price started moving down, I saw the bounce to the 5 minute. And as it was coming down, I was thinking, you know, where's the target here? Where is it going down to? And the 5 minute was my most obvious target. And sure enough, it came down to the 5 minute to reverse here. And these moves are pretty big for a account like mine. Like, you're looking at a good 285 ticks move downwards, and that's pretty good. And then it bounced again. So it was really hard. I guess what the hard part was is that even the 1 minute was not clearly in a point of interest, even though the 1 hour was playing its part. And in a 1 hour time frame, you would have seen it and you would like, oh, okay, it didn't break out. You know, it's trying to go down. That would have been clear. But in the 1 minute, it was very unclear to me because we're above the 1 hour, and I'm like, do these lows count? Do I take that into consideration? Right? But I guess that's a good way of reminding myself that gotta look out for the 1 hour, right? Because in the 1 hour, if you see it's coming up to the gap here, but it never broke above it, and this is not considered a break above it, okay? As clearly as you can see. If you're thinking, oh, well, it broke above it here, and then it's completely slumped down, it doesn't break above. I will make a video on what I consider a proper break of a fair value gap and what is not a proper break some other time, but this is not a break. So if I was looking at the 1 hour and I saw within this hour we're wicking down, that's a high chance that we're probably gonna push down and this fair value gap will probably play out. And I could have gone in with that mentality, with a short mentality, and seen it from that perspective. So when I then in that case looked at the 1 minute and I started seeing, you know, this lower high, even though the price in 1 minute chart wasn't inside the 1 hour gap, I could have been more confident with this. Anyways, moving on. With all that said, because I didn't see it like that, I was still seeing this as a continuation up. When I saw this 1 minute bullish gap, I decided, you know, let's take another trade. Even though this is a wrong trade against the wrong direction because I wasn't paying attention. I was like, maybe, you know, we have a very strong prior day high target. I've seen price come all the way down 5 minute and then starts going. Maybe it's one of those, right? It's coming up. It's trying to break out here, coming out of the 1 hour gap here. And I took it, but I quickly started noticing that price wasn't really good, right? Started noticing this. And a part of me, as I saw price moving, I'm like, you know what? I really don't like the fact that it's not aggressively pushing. So I brought up my stop loss basically almost to break even right here. And then I got stopped out. And I was happy with that because clearly afterwards, as you see it, doesn't take it, right? And then came the other trade. So trade number 3 was, I don't know what trade 3 would be considered. I wouldn't consider it a nice trade because now at this point I'm seeing the move already happen. And quite frankly, trade 3 was actually pretty bad now that I'm looking at it because I wasn't following my confluences. This is not a part of my setup at all. This was more of a let me see what happens kind of trade, which even on live account now I should completely stop doing, right? Only take my trade setup. But I took this trade as it was breaking momentum down, but it couldn't trade down. It inverted the 5 minute. So I was like, okay, well, inverted the 5 minute. This is still fairly okay because I got in as it's breaking down. The problem here is I saw it hit the bullish 5 minute right up under it, this part right here, right? And I'm like, yeah, it bounced here once. My initial target on trade number 3 was here on the liquidity. But I was like, the whole bottom of the 5 minute bullish could have been the liquidity, right? The problem is price was still doing this and we're wedged between 2 5 minute gaps. So usually this would have been okay. But then out of nowhere, you notice this candle, right? You notice this candle go all the way up for no reason, no news, no nothing. I don't know if Trump sneezed or something, but there you go. That would have instantly stopped everybody out. Went all the way back up to this bearish gap right there. And so at this wick, I would have gotten wicked out. Could have gotten stopped out right there. So not the best trade. As you can see, price it was really sporadic. It was really violent, volatile, especially because the 1 hour was trying to break out. It would have been helpful if I looked at the 1 hour. I could have seen a clearer picture, because if you think about it, I literally went long when I should have gone short, and then this was not a good entry, to be honest with you. I really don't know what to tell you here, because this wick kind of messed everything up. And that basically was all my 3 trades. Kind of looked at price again, and it did hit my targets that I was seeing. When it moves down, I was targeting the bottom of the 1 hour inversion here, right? It all kind of played out. But then you see a lot of this up and down range bound kind of movement. Even right now, as I'm recording this, it's 3:32 p.m. And even then, it's just a lot of range bound movement, not a lot of clear price action here. So there's no need to push it. With that said, again, go ahead and like and subscribe, follow me on Twitter, and I will let you see the live recap. Take care, and I'll see you on the next one.